What's up, everyone? Clayton here. The stock market came to a grinding halt today for 15 minutes because of massive declines. Stocks collapsed another 17 points this morning. Robinhood had another outage, and people are freaking out. They are already facing a lawsuit from their first outage. Oil markets crashed this morning, and Trump blamed the media, but he said, no, it's good for consumers.
You are fake news.
Federal Reserve cut rate, and stock market goes crazy. Dogs and cats living together, mass hysteria. What in the world is going on here? Well, we're going to try to make sense of it and put some of it in perspective for you. So in 1 week, we saw the biggest reversal in the stock market in 2 years. Then we saw the biggest one-day point drop in its entire history. I remember the good old days just 2 years ago when I reported the biggest point drop in history. I remember that video. Now we've got a brand new record. Then a few days later, we saw the biggest point gain in stock market history. Then it's down again. Then it soared 1,100 points after Joe Biden won Super Tuesday, which I'm still trying to wrap my head around that one. I can't figure that one out. But then that coughing thing hit, where everyone puts one of these things on, and that made the stock market plummet another 750 points. And then again, a day later, another 600 points. Well, then Trump, over the past few weeks, has been hitting the Fed hard, telling Jay Powell, the Fed chief, to cut rates and to not screw this one up.
Not you.
Can you give us a chance?
Your organization is terrible.
The Fed said that they wouldn't be pressured. And actually, they told Trump to mind his own business. But of course, that's not something that Trump does very well, minding his own business. And guess what? Then the Fed suddenly folded like a cheap deck of cards and they cut interest rates again. So who the heck is the Federal Reserve? And why does Trump hate them so much? He can't stand them. Well, don't fall asleep during this part because it's very important to understand what these guys do and how they affect your wallet. The Federal Reserve is the central banking system of the United States, and it was created in 1913 after a series of crazy financial panics, most notably the Panic of 1907. So there was an outcry. People went out on the street. Look at this. They wanted some control of the money system in America. They demanded it. So the Federal Reserve's purpose is to keep the United States economy healthy and the country's financial system stable, so we don't end up looking like Greece or something when everyone wants to run to the bank and get their money out. Officially, there are two monetary policy goals that the Fed is striving to achieve here. Number one, they want high employment. And number two, they want low inflation. And the main way that the Fed achieves these monetary policy goals is by setting a federal funds target rate. Remember that one. And Trump has wanted them to keep this economy boiling by lowering that rate. And guess what? They did. Well, as an emergency measure to keep the economy flowing on all cylinders, they lowered that interest rate again by 0.5 percentage point. Doesn't sound like much, but it is. So if you're like me and you don't sit in front of 80 computer screens a day doing day trading stocks, in other words, you're an amateur stock investor and you're trying to wrap your head around this roller coaster, you're not alone. Let's be honest, you see the headlines and it can be hard to make sense of sudden collapses like this. I've been watching the headlines all afternoon and it's scary. But I am a real estate investor who mostly avoids the stock market, mostly. But let's put this in perspective for you. So lowering interest rates typically means then consumers have more money to spend. And the Federal Reserve exists to keep prices stable, employment high, and the economy growing. And it accomplishes these tasks by manipulating the amount of money in circulation. Side note, this is why I don't invest in government currency. It's artificial. It's not backed by anything. And governments can just print more of it anytime they want. So give me tangible assets any day of the week. All right, side note finished. Now, when the economy slows down or enters a recession, consumers and businesses have less money to spend. And the Fed tries to stimulate recovery by lowering interest rates. It's one of the few arrows in their quiver. Lower interest rates reduce the cost of loans and debt. Consumers and businesses borrow much more, which in turn lets them spend more, puts more money back into the system. That's what they're thinking. So let's talk about the federal funds rate for a second here, because by law, banks must hold a certain amount of cash in reserve to meet unexpected cash outflows, such as everyone trying to suddenly withdraw their money at the same time, like they did in Greece a few years ago. Banks borrow money to keep their reserves at the mandated level, and the Fed sets the interest rate. The lower the federal funds rate, the more money banks tend to lend, as they can cheaply borrow the cash they need to make these loans. And there is a domino effect to all of this, if you're wondering how this all plays out. The federal funds rate is the benchmark rate, at which all other interest rates are set. So when the federal funds rate falls, other interest rates tend to fall as well. So the bottom line here idea is that when debt is cheap, people and business take advantage of it. Look, we are a debt economy. You must remember that. Powered by debt. Don't ever forget that. We are not a gold standard economy. We are a debt economy. And what's really weird about this whole Jay Powell thing is that the head of the Fed has been duking it out with Trump for the past few months, but Trump wanted him to keep the rates low and then drop them further. Powell now says, we got this, back off, but then suddenly they drop the rates. So what's happening here? Well, it's all about this illness that shall not be named, kind of like Voldemort. But that's it, full stop. It's all about this. Jay Powell said this illness has brought new challenges and risks, and that's the reason for this big rate drop. But this is amazing for real estate investors. As we've been talking about here on the show, interest rates for mortgages are at historic lows. I'm about to refinance 3 of my properties. People are refinancing in droves right now. Did you hear what Chase Bank had to do last week? Yeah, they had to bring in extra staff members just to handle all of the refinancing applications that they've been flooded with. Side note, if you're thinking about refinancing, always run the numbers first. Low interest rates are really sexy, but remember that you have to pay closing costs and points, and people often don't even remember that. So you might actually be worse off after you refinance. So only do it if the numbers make sense and you're actually saving money. Okay, side note over. Espresso break. While I'm drinking coffee, go ahead and hit that like button, please. It lets the YouTube algorithm know how much you enjoy all the work that we do around this place. Thank you. Okay, apart from the refinancing, low mortgage rates are helping to explode the housing market right now. We have no inventory in this country, and buyers are waiving inspections like crazy in order to get properties. Just look at Boston, for instance. According to the Wall Street Journal this weekend, there are buildings in the Beacon Hill district which are literally sitting on rotting wood, and they're sinking into the ground. It's a costly repair, but it takes a detailed inspection to find it. And realtors in Boston say it's so competitive that buyers are waiving their inspections just to get a leg up. Let me repeat that. Buyers in Boston are buying homes with foundation and walls that are buckling in, and they're waiving their inspections just to beat out another buyer. The buildings are sinking, and they don't care. That's how crazy the market is right now. You can thank these low interest rates. These interest rates are so low that it's literally like free money. Now, it's not as cheap as Europe, which is like at 0%. But it's pretty darn close. So there should be no reason that you should be using your own money right now. Use the banks, for crying out loud. Make your money go further with real estate. Heck, in Europe, we're already seeing negative interest rates. Of course, you know, I've done a whole video on that very topic and how negative interest rates are coming to the United States. We're very close to this happening to us, meaning you'll be paying the bank to hold your money. But all of this lowering of interest rates is hurting investors who don't know what they're doing. These are the types of investors who put their money into treasury bonds and savings accounts. Treasury bond rates right now are so stinking low that you'd be better off doing nothing with your money. I remember my grandmother putting some money into those treasury bonds for me when I was a kid. And when I cashed them out when I was a teenager, they were basically like the same price as when she put them in. I mean, you make like no money on these things. Savings accounts are hit hard by this rate lowering. 1% in most cases, unless you're using the new company called Outlet Finance, which is much higher than Robinhood or those other apps. I recently moved our entire Marcus savings account over to Outlet because of the 3 to 6% savings account returns. That's amazing. I'm gonna have a full video on this in a few days, but consider putting your rainy day fund sitting there. We'll have a link below so you can try out that account and you can start earning some money on that rainy day fund. So are these swings normal? Well, the short answer is yes. If you check out my friends over at seekingalpha.com, they do a great job of showing you how we see these swings fairly regularly. So this is not odd historically, but it is scary if all of your eggs are in the stock market basket. There are a few things I would start doing immediately though. I'd start to cut out that extra spending in my life, get rid of the crap that you don't need. I recently sold off tons of my liabilities, things that were weighing me down. I use that money to invest in performing assets like real estate, my favorite form of investing, as you know. The second thing I do is seriously look at your portfolio and consider moving it to a self-directed account, one that you control, one that lets you invest in real estate or other less volatile markets. Remember, a 401k is not self-controlled, and the fees that you're paying are often ridiculous. You probably don't even know the hidden fees. The third thing you can do is not panic. When people panic, they lose. So if you're a big-time stock investor, then ride out this wave. Sure, you might lose some value now, but historically it bounces back. And this type of correction is inevitable. So if you are heavily invested in the stock market, I want you to look at other options like real estate, gold, silver, tangible assets. The people that panic in these situations always lose. It's the people that take a deep breath and relax, have a cup of espresso, they end up doing well. So if you like this type of content, then please subscribe to my channel. We have over 400 videos here to help you build financial intelligence. And if you want two free stocks, you can check out our friends over at Webull. The link is below, and you'll get 2 stocks valued up to $1,400. So even if you never do anything else with the account, you just got free money. You'd be crazy not to take me up on that free offer of 2 free stocks. We publish videos 4 times a week, so please subscribe and hit that like button, and I'll see you in the next video.